Hi, Jim Gore from Thor Wealth Management. It's been a while since we've done a video for general consumption, but I think that this is important to do today. Most of our discussions over the last several weeks have been directly with our clients and communications with them on things that we are doing in their portfolio. But I think after the bill being passed last night, there's some things that not only do our clients need to know, but the general public as well. Well, with this bill, there's going to be some ramifications down the road that we don't know quite yet. That happened in 2008 and 2009, and it really showed up last week when we saw liquidity completely drain out of the bond market. So what happened in 2008 and 2009 is that the federal government came in with the banks. We all want to have them go after the banks, and disallowed them from being bond dealers. So if you look at this chart, back in 2007, we had over 250 dealers, bond dealers, people that were providing liquidity in the market by trading those bonds. Today, as you can see by the chart, it is a very, very small number because the banks have been forced out of it. So what happened? That caused liquidity to dry up in the bond market. And we saw that last Friday. We actually saw a couple of bond funds that were trading in some illiquid securities, some commercial real estate loans that were down 28% just on Friday alone. But it's not only those individuals, we saw it also from municipal bonds, high quality municipal bonds, and investment grade bonds were having difficulty selling those bonds. They weren't getting bids out. So what happened was, for the first time, the Federal Reserve jumped in and started buying corporate bonds. Now, here's the moral hazard. They're buying corporate bonds, and now they're going to be owning equities in the equity market for these companies that they're going to be bailing out. This is something that gives us some concerns going forward, because we saw in 2008, 2009 what impact it had on the bond market and how the bonds are traded. We don't know how this is going to impact the equity market, especially when they get ownership, dilute the shares, there's no buybacks, no dividends. It's going to be a while for some of these companies to come back and start growing in the stock market. But once again, we have to see where this falls out. Our biggest concern is the government getting more and more entrenched into the capital markets and ownership of corporations and lending to corporations as well, because if the company does go under, they own the bonds, they'll end up owning equities in those companies. This is not something that we want to see. I want to wish everyone very well. Take care of yourselves. If you can, work from home like I am today, and stay safe. Take care.